right, welcome to the show. Marc Sumerlin, Evenflow Macro Managing Partner, former Deputy Director of the National Economic Council. Did I hear $45 a barrel oil?
Yes,
Did I hear that?
You did hear that correctly. The official forecast for the United States government, the Energy Information Administration, is forecasting that oil is going to plunge to $45 in the first quarter of next year from $65. And so that is going to be one of the reasons why inflation will come in lower rather than higher compared to what people think.
And they're basing that on?
So they track production and consumption in every country in the world, unlike most people. And there are countries like Guyana that have a lot of oil coming online, and in aggregate, there's going to be 2 million barrels a day extra compared to what they think consumption is next year. So that's about a 2% of oversupply. And as you know, in the commodities markets, like small oversupply and undersupplies can really push the price around. So they're expecting a $20 drop in the price of oil.
We should probably be contributing a lot to, I mean, Trump's energy deregulation projects should be contributing some of this. Sounds to me like OPEC is pumping some more oil in.
Yeah, I mean, the OPEC, added about 2 million barrels a day, and that was really important this year. And there's enough oil out there on the market right now. And so it's a reason to be less worried rather than more worried about inflation in the quarters ahead.
Since April, prices of goods from the PCE deflator, not necessarily the best. I like the GDP deflator, but whatever. We don't have to talk about that. But 0.2, that's 0.2% bump up in goods inflation since April when the tariffs went into place, even though real spending on goods has gone up by almost 3%. So I'm still looking for this tariff inflation.
Yeah, it's hard to find.
0.2% for goods inflation, April through September. April through August. So April, May, June, July, August. So that's 5 months. Where's the tariff inflation?
I mean, even people like me who thought there'd be a one-time increase, it's hard to find the one-time increase from the data we're seeing. One of the measures I like, the BEA produces a market prices measure that takes out all their imputed measures. And that measure of inflation is running exactly 2.0% over the last 6 months, so exactly on the Fed's target.
So that's like the GDP deflator for the second quarter. The growth went up 3.8, which is a huge number, and the inflation rate was only 2.1 on a quarterly basis. Nothing much going on there. Why not let rates go down if you see these inflation numbers? It's not that I'm fighting. I don't think we have to goose the economy, quote unquote, because the one big beautiful bill is going to do that. But if the inflation rate's coming down on all sources, goods inflation, overall inflation, the deflators are coming down, you're talking about a potential drop in oil prices, why not drop the Fed funds rate? What's Jay Powell, it's like, what's he afraid of?
Yeah, I think they just move very slowly. I mean, I think that's a criticism that's correct, and they move a little bit late, and they move a little too slow. But we can tell the Fed funds rate is too high. We can see it in the inversion in the front end of the curve. We can see over the last 2 years we've had very gradual drift up in the unemployment rate, and we've seen inflation coming down, and so we know they're above neutral, and so they should correct that right now.
I mean, the evidence, I don't care what the theories are about tariffs and inflation. The evidence now, 5 months into this tariff game, is that there has not been any inflation. If it pops up someplace next year, then the Fed can always cut back. They can raise the rate, cut back on the money supply or balance sheet, whatever. But I'm just saying right now, take a rip of the ball. You know what I mean? Just take a swing at the ball. It's like Aaron Judge finishing in the last 2 weeks of the season was unbelievable. Where this kid was the catcher for the Seattle Mariners. I think that's the right team. Anyway, you see what I'm saying? What is Jay Powell afraid of? It's a phobia.
Yeah, I mean they have their models and they look at them. I like to look at the real world and see what's going on.
Look at the actual numbers.
And so the models say rent inflation's high, in the real world it's falling by 1% right now.
Right.
So
another one. It's another point.
Yeah. So I like to see what's happening in reality and use that more than my models. So
Marc Sumerlin, you used to be an ace on the National Economic Council. I can just tell you that. Thanks very much for coming by. We appreciate it.